Hey guys, Mike here. So what a day for small caps. It was all about IWM today. We're going to go into the chart because as usual, remember it's a soap opera. They had to leave a little drama, and where they left it today, it's a line I had drawn already. But we'll see if tomorrow's the real deal or not. But I'm also going to give you a list of stocks to watch because if these stocks are mooning, which is what you're seeing happening right now on IWM, small caps, then IWM's going to have a very, very good day, okay? Because, and I'll say this right off the bat before I even get into it, what I forgot about was, honestly, I got to update my list of these stocks because they're always getting rotated on IWM when they rebalance and stuff. But remember, for those who went around 2020 and 2021, you had a lot of SPAC stocks, SPAC. Remember those kind of stocks that were rolling out, just like nothing. And they went to the moon. And so some of them went to $100, $200 a share. Well, then 99% of them went down to penny stocks, and they got rotated off into the Russell eventually. And so you're talking about going from 200 down to some of them down to 35 cents. All right, and they don't have a huge float or anything. The SPAC stocks, the SPAC stocks, have a lot bigger ones than you'll normally see a lot on the Russell. And I'll show you another squeeze in the day we talked about. It has like 50 million shares in this float. 20% short interest is nothing to squeeze that stock. And so a lot of them are like that. And so I'll show you those stocks so you can look at that. And remember, for 4 years, I coined that phrase, year first. And I'll show you two more. I almost wanted to wait to 2025 so I could do it then. But I'll show you two more in 2024 that's happening that, as far as I know, we've never seen this before. And so, I'll show you that. At least we hadn't seen it in my lifetime. Let me just say that I was born in the 70s. I hadn't seen it in my lifetime. So it's been quite a while, right? But also, because I know I get in the comments all the time, like, man, the stock market, it's like a bubble. It's going to bust, all this stuff, and it keeps going up, and it just seems crazy. Well, I will show you why. I'll show you why. I keep seeing people go, Buffett's in record cash. He knows something. And I always tell you, friendly advice, not financial advice. Don't ever get out when he gets out, and don't ever buy in when he buys in, because he's always early to get in. He's always early to get out. All right, that's just the way it is. But remember, we don't have Berkshire Hathaway's $300-something billion in cash, or $100 billion, whatever it was in dot-com bubble in 08, and we don't have billions of dividend checks rolling in every week or every month, okay? So Berkshire Hathaway can do that, okay? It ain't about the timing for them. So anyway, we'll get into all that right there, but I do want to start off with this, and this is your tax dollars hard at work, folks. Hard at work right here. This is one that frustrates me, by the way, because I hate my tax dollars to be going to this. But you can see down here, you got federal, state and local, and then private jobs, right? Full-time jobs. But you can see private, and this is true, is in the toilet. We've never seen this low without a recession before. And it's true because you see all the time announcement and layoffs over the last 2 or 3 years. You've seen it right and left. Look what's at the top, though. That's state and local jobs right there, full-time jobs. Federal's in the middle, a little higher than normal, but not much. But state and local, way up there. We hadn't seen it this high since the 70s, by the way. This goes all the way back to the, if I'm not mistaken, 60s. And so you can see that is what's propping this whole thing up. So you keep saying, man, how can these people get this money to keep buying all these gifts and travel and everything else? And well, it's credit cards, it's buy now, pay later programs, and it's your tax dollars hard at work employing them, okay? At one point in time, I think we were employing like 56,000 healthcare workers through the government every single month or whatever it was. And you saw unemployment claims came in a little less than expected today. So that's, that was pop the 10-year yield, which we'll talk about in a minute. But then it sold off. But you can see right here when we zoom in here, look at the state and local jobs way up there. And it's rare you see it above private because there's so many companies that could hire people, right? So it's rare since 2000 to see that. And so now you're seeing it, okay? So like almost like a year first there, right? Now, looking at SPY real quick, you can see what was it done this March up and continues to do. Just comes back down. It does a test of a prior support level. Here it actually did it twice, then moved up, as you can see right here. And then when you look above, what'd you see again? We came up, we had this election gap, came down, retested what? This level right here, not once, but now we've done it twice. Okay, so you can call that a double bottom, whatever you want to call it. Doesn't even really matter, but it tested twice and it got its bounce. So it did not fill that gap. And so remember, gap ups don't feel anywhere near as much as gap downs. Pop quiz why, I've told you many times, because the market goes up 70% of the time. Those gap ups feel on crashes most of the time. Now you can see we've almost filled that big fair value gap what was left during the FOMC meeting to the penny, almost. So we'll draw a trend line here. We got many touches to see because we kept setting those lower highs right there on that 2-hour time frame. So we'll see what happens when we get up there. I mean, obviously, that right there has been resistance, or I'm sorry, was support, excuse me. Now kind of acting as resistance. We'll see if we get back up in there or not. When you look over here, so again, could we come back down some? Yeah. I mean, right now, we talked about this, before Christmas week, you see melt ups. And in low volume weeks like this, you'll see melt ups, and then you've just seen it just go up and up and up and up and up. Today was a very quiet day for the SPY because, again, it seemed like either it was rotation IWM or it was a short cover in IWM. We'll get in that in just a second. But you can see as far as moving up, we're at the 0.79 fib now. You saw it take a break. Again, you know, I love my fibs because they're the truth. And so, you know, you come over here to QQQ and look at the Qs, okay? And you got the exact same thing. It's moved up to the 0.79 fib, and shockingly, both of them took a break today. That's just the way it is. Now, this one did leave a gap. The Qs did. So we'll put that gap in there in case we want to come down a little bit to digest this move. Again, we got a short week next week because of New Year's, so another short week, another holiday week. This one hadn't quite filled that fair value gap to the left, as you can see right there. But when you come over here and see what the party was all about, it was IWM. Up over percent today, like 1.2%, I believe was the high right there. And there's a white line right there, which actually closed right at that white line right there, which I was kind of waiting to see if it would do that. Should have known because we needed drama. But I said, what did I say the other day? Just get above the FOMC anchor VWAP and let's, you know, talk then. And so we came up, tested that anchor VWAP, boom, took off. Kind of like a slingshot effect. But again, it was beat down, right? I mean, this thing was just been crushed. And so again, we talked about this one. You bring up your VRVP, volume range, volume profile. That's where you're going to bounce, right? And there's all these little gaps in here. And you see when it hit this gap right here, how it just flew through there. And you look on the right, and there's all these little volume gaps. So when it gets in that gap, it's going to fly. I'll bet money on it. That's exactly what's going to happen. And then when it gets to another volume node, it's going to kind of lose steam for a second. But that area, you can see that white line, why I put it there, because it was resistance multiple times in the past. Then it became support. Now it should be resistance. So the question is, if we can break above that tomorrow, I'd love a retest of it, by the way, and then bounce from there, then get above the 50, then you're cooking with Crisco, okay? Now, you look over here at the 10-year yield. IWM was down more than 0.5%. Actually, it was down like 0.8% in the morning. Why was it down before it got going? Because the 10-year yield, unemployment claims came in less than expected, which is hotter news, right? But that line, I keep putting these lines on here for you and telling you, you can chart a 10-year yield. You can chart anything you want to chart, I promise. It hit that thing, boom, down we go. All right, that is resistance. I have another resistance line above that. There's another resistance line above that. So again, like I said, if you get these moves up here, IWM is going to be hurting, and that's what happened. But then once it gets rejected, it starts going sideways, just cools off, right? Then we're moving. That's all it needs. And so I'm going to talk a little bit about the 10-year yield here because I think there's a lot of confusion of people hear me say, man, I hope 10-year yield comes down. That's just if you're trying to get an IWM and small caps and a couple other things like TLT and stuff. I'm not trying to say, I hope to God we have bad economic data and everybody lose their jobs. I'm not saying that at all. But from an investment perspective, you're trying to get in TLT, I say this in the Saturday videos, or IWM, you cannot have the 10-year raging higher like this and start heading towards 6%. Just don't work. I've showed you the chart many, many times. They're going to go into the big boys, NVDA and Tesla and Microsoft and Apple. You saw Apple up again today, setting a new all-time high, right? But this is one of the first times we've ever seen this, at least in my lifetime, it's the first time we've seen this, where the Fed cuts 100 basis points and the 10-year yield goes up 100 basis points. I mean, you just look at this. Normally in the past, they've cut, right? And it's kind of gone down, or at least sideways, both times. And I'll zoom in on the right-hand side so you can see what I'm talking about. You can see it in the .com. You see it in 08 crash. You see it in 2018 crash. And then we come over to where we're at now. And, you know, they've cut 100 basis points. But what's the 10-year done? It's like, see you later. We don't believe that crap. And it's going up. What's the difference, though? What's the one thing we have going on here that we didn't have going on all those other times? It's inflation. It's exactly what it is. It's above its norm. And you also have, probably for the first time, I don't remember when they were cutting back in these things, what economic data was looking like. But for them to be cutting when unemployment is as low as it is and numbers are coming in like they are, that's another thing the bond market is kind of going, no, you know. And here's the thing. The 10-year has plenty of room to run. Why does it have plenty of room to run? Because of these yields that are uninverting. The 10-year, 2-year, look at this thing. Boom. In order for this to uninvert, the 10-year has to be higher than the 2-year. That's just the way it is. It can't go up, right? It's a math problem, right? You got your numerator, your denominator, okay? Numerator's bigger, number's going to be bigger. If the numerator is smaller than the denominator, it's going down, right? So it's because it's a smaller number. And that's why we went in the negatives. And so again, we pull up 10-year 3-month. Wow, it's uninverted. And this is where we talk about things breaking. Why do things break? Okay. And if you don't believe me about as far as, just to kind of show you, not that you don't believe me, but just so you understand this, I'm a visual person. Here is 2024. Look at the 3-month yield, 5.52%. Look at the 2-year, 4.98. Look at the 10-year. It was less than both of them. That's why we were inverted. Okay. Now all of a sudden you look and you go, okay, in this little diagram, this is only till November 25th. The 10-year is now higher than the 2-year. But when I take you to today, look at what we got. There's the 3-month, 4.32, somewhere in there. It changes all the time. Here's a 2-year, and then there's the 10-year. Looky. Now the 10 years eclipse both of them. That's why things are uninverting. And you see on those uninverting charts how high the uninverted usually goes before we end up breaking something, hitting recession. Which means a 10-year, that's why they're calling for like a 6% 10-year at some point in time. But it has to stay above that. Now, again, the other ones could drop. Maybe this don't move up as much, whatever. But that will put a lot of stress on a lot of areas because what do we talked about with the 10-year? Look at mortgage rates. I showed you a Saturday's video. I said, oh, we ain't updated this, but the 10-year has been moving. Well, now what have mortgage rates done? They've gone up. The 30-year, that is, right? So lending rates follow this. I bet you've gotten emails talking about how we're going to lower, the banks that is, your savings account return, right? The interest return or the yield you're getting. Why? Because the FOMC, they've been lowering the Fed funds rate, which is the savings rate. All right. So don't you love that? They're lowering. So you're not getting as much in your savings account. But when you go to get a 30-year mortgage, you actually have to pay more now, right? Or other kind of loans and stuff. You got to pay more. So that puts stress on the economy, right? Because now you're paying, people and companies are paying more into interest expenses than they are into food and vacations and homes or whatever it is, right? And so that's how that works. So hopefully that makes more sense when you see a visual. Again, I'm not a bond expert, so if you got a better explanation, please put it in the bottom. I read them all, and I've learned a lot from you guys, by the way, who are big into the bond market, and other members we have who are big into the bond market and stuff. Like I said, I never looked at bonds for 2020 or 2021 actually. So yeah, I pay a lot more attention to that, as you can see, and you've seen right on with IWM and stuff. Now, here's a list of stocks to put. You might want to look at them, try to invest in them, but more important, just watch them if you're a big IWM small caps person. These are the quantum computing, the flying cars, all this mess, right? But these are the numbers today. Look at this, 46%, 70%, 24, 37, 8, 13, right? So again, I'll show you a couple of these because one of these I actually gave to the members in the morning. But when you look at this, and you see these are being pushed up. Some are being short squeezed, and some are just being manipulated up because of their very low float. Okay, and I'm going to show you this. Like Rocket Lab, I gave the members this morning. I said if it hits this right here, it's going to go to this number. It trades on the Russell. Why? Because here you are. This is, I believe this was a SPAC, if I'm not mistaken, SPAC. Right, but it's highly shorted, and it's just sitting in this formation where if it breaks out, it's just going to go, right? It gets a lot of momentum behind it. But the other one is Lemonade. Remember we talked about this? I haven't changed this chart for those who remember. I put these boxes in here saying, wow, it's had this huge squeeze. It's either going to this box or it's going to the other box, right? We just got to see because it's been such a big move up. And I showed you exactly why it made that big move up. And we used the fibs and put these boxes in here and stuff. And I'm going to extend this out now. I can kind of correct this now that I showed it to you. But when you look at it, you know, we did finally end up getting a retracement. And again, what's it doing? It looks like it's trying to break out on a daily time frame right here. And there's the other box up there. But when we pull like a fib on this thing, you can see whether, no matter where you want to come from. If you want to come from the other box right there, you can see it's got a nice retracement down of around the golden pocket. And then if we pull it all the way down from the beginning of this whole squeeze before November, you can see it hit right at that 0.5 fib right there. Okay, so it did have the retracement. Now it's breaking out that trend line, moving up, you know, pretty good today. We'll see if this is an actual breakout or a fake breakout. But why can this move like this? And again, that box up there is where I'm going to leave it right there, just in case. And we actually look at like pulling the fib the opposite way of where it can go. When you're using fib, just pull a high to a low, low to a high. You can pick it, play around with it, okay? Don't be shy. But I'm going to pull from this low to that high right there we started to retrace from. You can see in that box is the 1.272, right? At the top of that box is the 1.5, excuse me. Why can this stock do this? What's the magic? Trades on the Russell. But look right here. We're going to zoom in here and look right there of this float. 52 million shares in the float at a 30% short float. That's why stocks like this can move like that. Okay, it's not fundamentals. It's not like they hung the moon. They'll tell you that is not true. Okay, this is why they fall so hard too. So just understand when you're looking at those stocks I showed you. If you're a charting master, have fun with it. If you're not, be very careful. Okay, now some other stocks. ABGO we've been talking about. Nice 4 days here. Moved up past the 240. Got to 245. What I'm curious about though is the 250. Why? Because there are a boatload of 250 calls on ABGO. And what I want to see is, are they going to double top this thing? We talked about this right here. A low, high, higher, low. Now, do we get the higher high or do we double top it and sell back down on this thing? And they do not want to pay this out right now. That's what I want to see. You know, a lot of people had 240s. They paid those. We'll see if they're going to pay the 250s. And I asked that because when you go to NVDA, okay, ABGO's outperforming NVDA quite a bit. But you go there, though, it cannot hold that 140 level. It's struggling. And I'm telling you, there's got to be millions of 140 calls. That January 17th call, there's got to be. Let me know if you got it. But I mean, I just see it all the time. And so, you know, we're going to see if they're going to try to let this thing push above retails. Right now, it just cannot hold. That's a key level. That gets us to 142.50. That gets us to 145. That gets us to 149. What is that? 95, somewhere in there. And so we'll see, because Tesla was down today. Again, they still can't seem to move together for more than 2 days, whatever it is. And so, you know, because Tesla was up last night, like, what was it, up 3% or something? It's always like that. They always push it up overnight and then try to dump it. It's crazy how they're doing this thing. But again, we'll see. But hopefully, at least you understand the 10-year better. If you're in a small cap, you're looking to try to get into it. If we break that key level tomorrow, and I'd love to see a retest of it. You get a retest and bounce. I mean, I think that's the real deal. But again, look at that list of stocks. If they're red, because they do big drops, but they do big pops, okay, then you know it's pretty much on. I mean, that's kind of the way it is, the way small caps are. That's why it's different to chart than like QQQ or SPY, right? I mean, Apple's not going to be shorted 20, 30%, and neither is Microsoft or any of the rest of them. But, you know, and they don't have these low floats you got to worry about, because remember, they're weighted. The Russell is more equally rated. Some outweigh the others, but not very much. And so hopefully that makes sense, guys. Again, put your questions in the comments for Saturday's video, because tomorrow is Friday. My days are all messed up being off like on Wednesday and all that stuff. So I don't know why I keep thinking it's Monday right now. But anyway, am I the only one that feels that way? So anyway, hope you guys have a good one, and I'll end up seeing you on Saturday's video.